right. Well, hey, good afternoon, Lydia. Thanks for joining
Hi,
me.
Sarah. How are you?
Doing awesome. I think we have, once again, a lot to talk about. That's almost surprising that it's only been a week, but so much has already happened again.
Absolutely. Absolutely. So we're back talking about forbearances and what's the latest of forbearance. And for those that don't know, forbearances are basically they're a short-term loan modification, and they came up with them when COVID first hit to help homeowners that were on furlough and or had lost their jobs due to COVID. So um, now we're seeing people go back to work, and Fannie and Freddie want to see exit strategies. So give us the latest update on what you have for the forbearances.
Well, thank you. And one thing, thank you for doing that, giving that explanation. And remember, forbearance is not forgiveness. It's just a payment deferral. It is not releasing the debt. So according to the Mortgage Bankers Association, the forbearance actually only just dropped slightly in this past week, but that's okay. We're still going in the right direction. It's still going down. We're about 3 million loans are in forbearance, which is about 5.9. Last week, it was 5.92. But the big thing, really, the bigger story is that over the last couple weeks, we dropped over 400,000. So that's, you know, when you're looking at 3 million, that's a significant percentage of 400,000 that we're coming off. Now, when we look at what we have currently of that 3 million, about a quarter of them are in the initial plan of forbearance. Now, most of them are 6 months. There are some that are 3 months, but the majority are 6 months. And then 73% of forbearance are in extension, which is when you've gone 6 months and then you've extended it to another 6 months. And there's a very
so they're usually extended for 6 months, right?
Correct. And then at the way they're set up now is, so you can have, you know, the first one 6 months, the second one 6 months, and then you have to come up with another option that's not a forbearance option. So there's things like, you know, permanent loan modifications, refinances, making other payments, things like that. There are ways that you can manage that and not be in a forbearance program. But there also are re-entries into forbearance. So about 2% of those are re-entries back in.
Interesting. Okay.
Yeah. So, and that can be, and remember, these are all due to hardships from COVID. And, you know, so we talked about one thing with those extensions, and this is something that is so important that everybody knows. In order to extend a forbearance plan, the borrower must contact their servicer. I can't weigh this out too heavily, because if they do not, they're automatically pulled out. And that's one of the that's what some people are suspecting why so many came out over the last 2 weeks, because we are now 6 months into COVID, where you look at this, and it's really important that everybody knows that the borrower needs to call their servicer, contact their servicer, and talk about what their next plan is. Otherwise, they're out and they just get a big scary bill and don't know that they have options.
Right, absolutely.
Another big part of that's kind of big news is FHA and FHFA actually did just extend. So forbearance through the CARES Act was supposed to expire this Friday on the 30th, and they did extend it till the end of this year. So this is saying now, as it stands, the latest of forbearance can be possible will be the end of 2021. And that's where it is at this time. But, you know, it is kind of fluid. And Lydia and I have talked about one thing is forbearance has changed tons over the last 6 months. And so that's why it's always so important to make phone calls. Now, one thing that I think is important to talk about is forbearance. Along with forbearance are delinquencies. Now, always note, so forbearance properties or loans that are in forbearance that are not being paid, about a third of them or a quarter of them, I've heard different numbers, are current on their loans, even though they're in a forbearance plan. But anybody who's late and still in a forbearance plan, they are being counted as a delinquency. They are not being penalized for that delinquency, but their numbers are counted within the delinquencies. And so we know some of the things in regards to delinquencies. As September actually dropped, our national delinquency rate dropped from August at 6.88, went down to 6.66. Hey, we'll take any improvement. Really good news is the early stage delinquencies, which is 30 day lates, we are now back at pre-pandemic levels. So that
Yep.
shows that people have kind of gotten in. We're not having a whole lot of people joining into forbearance. And the reason the numbers now are coming down is more and more people are coming out of forbearance.
Right.
Another big news that is really cool is that seriously delinquent, which is 90 days or more late,
Yep.
dropped in September for the first time in 6 months. So the number with like a significant drop of 43,000.
Which is huge.
Awesome.
Yep.
So we still are about 2.3 million homeowners, about 5 times where we were at the beginning of 2020, are in that seriously delinquent period. But we're looking at it, seriously delinquent 2.3 million homeowners. A lot of people have a lot of fear about what does that mean? Well, in 2008, when we had all the foreclosures hit, we had almost 9 million foreclosures. Right now at 2.3, it's just a fraction of it. And quite frankly, with our incredibly low inventory, anybody wants to list their house, it's going to get sold fast.
Right. Right.
And speaking of which, just to, you know, a little bit of real estate content, where the Mortgage Bankers Association is actually projecting that we will have another giant year of purchase applications and purchase loans. They are expecting 8.5% increase in purchase application or purchase loans in 2021, up to $1.54 trillion of originations, which is bigger than the biggest year we've ever had. And, you know, rates, they do say rates will stay lower-ish, but that it's unlikely that they'll stay under 3. So that's going to be one thing that we are watching, because that does influence affordability. And then finally, my last piece, and just a little bit of real estate data that I think is a big deal. So in a typical year nationally, we do have about 5.5 million transactions. We had that in 2018. In 2019, we had 5.35. A really healthy year is 5.5. So, you know, when you're saying, okay, well, at 5.5, it's a really easy rule of thumb, really good number. Holy cow, this year, right? Nobody expected. We're on pace for 6.5 million resale transactions. That's mind-blowing, especially that we're running 40% fewer listings this year than last year, 38. And then, of course, it depends on your region. Now, when you take, what does that have to do with forbearance? Well, when you have higher demand than there is inventory, right? Supply and demand, it's Econ 101. It's going to drive prices up, which then if people are struggling, if they are in forbearance, if they are delinquent on their mortgages, it gives them even more options. They can sell and have even more money to walk away with. So there are things that are happening that are really good for people who are in these forbearance plans.
Absolutely. But the one thing they do need to know, like you said earlier, they need to call their servicer. It's really, really important that they have that communication. They need to let them know what their plan is. Do they need a longer forbearance? Do they need to be put in a permanent loan modification? Do they need to maybe sell their home to get out from under it? That would be probably the last of the options, but there's other options that they can do. But it's really, really important to have that communication with their servicing company. And Freddie and Fannie are the 2 largest investors of mortgages, and both of them have extended their with the CARES Act to the end of December 31st of this year. We don't think it's going to extend at this point. We don't suspect it. So what they are asking is homeowners to first off talk with their servicing company. Servicing companies are the ones that manage the loans, and try to get an exit strategy, whatever that looks like for that person. So we need to figure out how to get folks out of their forbearances by the end of this year, because Freddie and Fannie have basically suspended all late fees that go along with it only till the end of this year. So it's really important. Yeah. So it's really important to get with your servicer. If you need to extend for another 3 to 6 months for a forbearance, then do that. If you need to make a permanent loan modification, then you need to do that. And then there's other options that you can do as well. And just having the prices of homes, at least here in our region, go up could potentially help those folks that are in forbearance. So
Absolutely. Absolutely. And prices are going up across the country. There's only two places that they're not really, and it's New York City and San Francisco. And
Yep.
it's, some people are saying it's because their prices were so high, and a lot of people are trying to go to more affordable places. But when you're
Right.
talking about every market in the country appreciating, it's giving people options. And that's the
Huge.
bottom line important thing.
Yep. And you and I are both in the business of home ownership. So trying to keep people in their homes is the best way to do it. And if you have to sell and get some of that equity out, regroup, then get back into it, that is an option as well. So if anybody has any questions, or if they did a forbearance and they don't know what their next option is or what their next steps are, or if they I mean, they may think they're in a forbearance and they're really not. So
Yes.
it's, which is really scary, but we
Yes,
are
that's
here to
happening.
help facilitate getting you through that process. We've got all of the options for you. So if anybody has any forbearance questions or what your options are, better to go through those options now than December 20th, when
Yes.
you're trying to figure something out by the end of the year. So let's regroup now, figure out what we're going to do. We've got a couple of months that we can work with you and get you back on your feet by January of 2021.
I think that's great. That's great. And the sooner the better.
Yep.
That's it. Questions, ask them.
I agree. I agree. Thanks, Sarah.
Awesome. Well, you know what I just thought of that's really cool, Lydia?
What?
We do this on Wednesdays. So by the time we do this again, the election will be over. Woohoo!
Yay!
We may not know who our president is at that point, but at least it'll be past us. We won't have to deal with any more of those attack ads.
Exactly. And that may make a big difference for people as well. So, there might be more inventory at that time. There a lot of things could happen between now and next week. So, but we will regroup on Wednesday and we'll get you another update on forbearance at that time.
Awesome. Well, thanks, Lydia. And I look
Thanks,
forward to
Sarah.
seeing you then.
Great talking to you.
Good to see
Take
you.
care.
Bye.
Bye-bye.